Hey, when we are live, 365. Ladies and gentlemen, good afternoon. Shake my hand if you're watching on the live stream and you're here with me. I do sincerely apologize for the, I guess, 5 minutes delay after the 30-minute change. A lot of stuff was going on in the background, but if you are watching live, please do let me know. Just give me a sound check, give me an audio sound check. But in the meanwhile, I believe my audio is good and I will be starting. I repeat, I believe my audio is good and I will be starting. Right. So today's war room is, very, very special. I guess not special in like something big is happening, but it's important to point out a couple of things that have happened in the last 2 to 3 weeks in the market, and that is where I would like to start. So we are going through a lot of the stuff we've spoken about. We've seen it play out, risky assets, markets falling, etc. Today I'm going to be looking at a couple of charts. So real quick, I'm going to look at the DXY, Bitcoin, Nasdaq 100, and then the Japanese index, the currency index. And then for currency trading setups, hey Titus, what's good, brother? Can you hear me loud and clear there? And for currency, I'm going to look at AUDCAD, Swiss franc JPY, Euro AUD, Euro JPY, AUD, Swiss franc, CAD JPY, Euro pound, Euro USD, pound JPY, pound CAD, NZD CAD, USD CAD, USD China yuan, NZD USD, and pound USD. Thanks for the mic check there, brother. Thank you so much, Titus. Right, so it's quite a mouthful to do. And on top of all of that, I have to make sure I am out of here by give or take 6:45, right? So that we can all kind of like have an early night. For me, I need an early night for tomorrow. Right. And then the next thing I want to quickly bring up before we start is if you're a 365 student and you've done my course, there will be a senior trader who's going to watch this war room number 67 before Tuesday. But if you've already done the course and you already kind of like know our trading strategy, this is the war room to look out for mistakes from me. All right. I currently closed most of my beautiful swing trades that I took with you on this channel. Nasdaq 100, S&P 500, US 30, Bitcoin South. Right? I've closed all of those. And altogether, I reached a state of euphoria because I succeeded in there's a specific target, a specific financial target that you should have as a trader, that you should know, right? Once you get to that target, you might fall into the euphoria trap, the trap of thinking you know better than the markets, the trap of thinking you are always right. I am currently in that zone right now, right? I made quite a bit of money from War Room 64, 65, and 66, right? Really focusing on those company indices that we spoke about 2 weeks ago. And so according to my trading rules, there should be zero trading for me this coming week. I should not be trading. In the event, I am still kind of like, floating between euphoria. Right. So I have to be honest with you guys, right? Today you're dealing with someone who's not entirely sure, right? So please triple check everything I'm about to say in today's war room, right? Triple check it because I won't have my own money on the line this week. All right, this is purely a state of euphoria. If I get triggered, I'll get triggered into pending orders that I've already pre-set up, but I will not be looking for completely new trading setups this week. All right, so and so if you take any of the trading setups I'm going to give you guys today in War Room 67, please just be mindful that my state of mind right now, given how well the last 2 weeks have gone and how I closed most of those beautiful trades, I'm potentially in a state of euphoria. I'm so sorry, man. I'm so scared to pronounce your name. Avishin, ready? I'm gonna go ready at the end there. Good afternoon, buddy. Good afternoon. Oh, yeah. Right. So let's rock. Let's rock with everybody. Right. So let's talk about the dollar real quick. I also don't want to give a big market perspective in today's video. I think I need 1 or 2 more days just to get my head straight, right? I'm starting to almost wonder, is the bottom here? And so I need clarity on on a couple of things on my side, but I will be dropping a video this week to follow through on market sentiment and all that kind of stuff, right? So we've got the US dollar. We've been tracking this, trading this. I unfortunately still haven't managed to get a very good long-term swing trade into it, but this has just been a very easy intraday asset to trade. A lot of good money has been made on the dollar. We'll be talking about this. Long-term uptrend on the daily, weekly chart. We go to weekly. It kind of like shapes the parabolic structure into the monthly, right? All the way from last year when it was threatened that interest rates were going to go up. And then obviously with interest rates starting to go up earlier on this year in March, the dollar has done nothing but break out of an upward channel into an even more parabolic upward channel. And we've spoken many times of where this asset is going, tearing through two governing supplies, right? So this is something I'm looking out for. Inside the H4 time frame, I found a short-term trend line. All right, and it's slowly but surely starting to stretch into the medium term. Medium term is more than just a couple of hours to a couple of days. When we talk medium term in the markets, we're really looking, a couple of days to a couple of weeks. And markets can't stay parabolic that long. You can see every time there is that situation in the market, there's a break of structure. And I've shown this many times, so I'm going to move on. Right, so I'm pretty sure when markets finally make contact with this big old supply here, and inside you can see I've marked out two white lines, and that for me is one of the very first daily supplies nested inside that zone. I'm pretty sure when markets make contact there, we are going to see this H4 short-term up parabolic trend line break, which is not an indication that the dollar bull run is over. It is just an indication that the short-term, right, parabolic structure has come to an end, right? So if this breaks, what we then want to see is want to catch some sells. Those of you who are brave, I don't think I would, but it could be very good money, right, to somewhere in there. So this would be a very good place to buy. So, and that's kind of like my projection for the dollar for the next coming 2 to 3 to 4 weeks, give or take, right? But breaking this parabolic structure is not an indication, I want to be very clear, that the dollar bull run is over, right? So this is what it looks like on the daily time frame. You see this on the daily time frame. If we break this weird straight line that I've drawn here, it means absolutely nothing. We want price to arrive somewhere here or even slightly lower, but the original uptrend line highlighted by this line and this line, this channel, will still be intact, at least to catch price on the downside, right? So anyway here would be a very good place to catch price moving up, okay? So just watch out for that. Why am I bringing this up? Remember, as soon as we see some weakness in the dollar, money will rotate around other assets, right? So assets that have been doing bad because the dollar has been doing good will start to do well. And that's predominantly your risk sensitive assets, Euro USD, Pound USD, AUD USD, including your equities, your stocks market. So this is something to just kind of like keep in mind of, please, right? Number one, right now, I'm going to quickly only do 4 COT readings for you guys today because of time. But if you're a registered student, please note, I got you. I finally, everything is absolutely up to date. All the currencies are up to date. And let's just do it this way so you guys can see it better. Yeah, there we go. Right, everything is just prim and proper. I've got all the latest, COT information for you, right? And it's definitely worth having a look side by side, with your charts. But let's quickly look at the dollar. Right, so for the dollar, and for a lot of you guys who remember, our 13-week average is a good center to kind of like focus on. And you can see they are still predominantly, and I'm going to say for the last 3 weeks, so since the end of April, first week of May, second week of May, which is what we just hit right now, all their buy orders are above average. All their buy orders are above average, right? So you can see here, I've already worked out a formula for you guys to kind of like let you know exactly what the 13-week average would be for the longs, and it's 44,768 orders. And I'm saying to you, in the last 3 weeks, we've actually seen that most of their buy orders, they've been more aggressive in the longs from the 26th of May. And if you come to your particular chart, you will realize that is when this parabolic H4 structure started. right? I can't do everything. I can't do the signals and do some quality teaching, but I want you to see this is when they started adding above and beyond average buy orders, right? Starting to become more aggressive on the long, 75.9, 77, and another 77 basically, and cooling down the shorts. That's the creation of this parabolic structure you're looking at. On the 26th of April, 365, shake my hand, you know this is an important part for a clean demand zone was created on the 26th, when all of a sudden there was this aggressive nature in our COT data collection, right? So it's something to keep your minds on, something to very keep your mind on, that this could be them kind of like becoming a little bit more aggressive. On the other side of the table, you can see that they've kind of like toned down a little bit, our sentiment indicator for a sell side, such that if they do sell and break this H4 structure, it is too early for us to believe it is a reversal. That's my point. Look at how careful they are at managing the other end of the table. From 3,000 sell orders to 2.6 to 2,300, right? Or 2.4, right? They are preparing themselves to only take profits. They will open sell positions, closing longs to take profits versus, fundamentally, cutting us down and doing a market reversal, right? So DXY, I've been looking at that. Bitcoin, real quick. And when I talk about Bitcoin, I'm going to immediately cover NASDAQ. Those of you who took those beautiful sales with me, like I said, Friday, I also closed my Twitter trade, but I think I've made that public on the 365 Trading Academy Facebook page, right? So Bitcoin has been hovering at, an incredible area, right? The 28,500 level that I told you guys about, I think maybe 2 months ago. Right, so you can see that markets came in here and then fought to stay above, closed above, came back to retest, and they've been moving, right? So one would definitely happily use the words that there is a strong support in this area, right? If you look on the weekly time frame, or on Bitcoin, you will see that the entire structure, the entire gains and movement of Bitcoin from January 2021 has really much come full circle here in January 2022. And then slowly that structure has decayed, like completely decayed. Now, if you joined me last week in our last week war room, while I was giving out signals, I quickly taught you guys about the structure here with the blue lines. And I told you that you must be very careful about these patterns, how they are taught in retail trading textbooks and how they're actually used in the real world, right? Can you see this? This is an upward pattern. Upward pattern would suggest that price is going to make contact at the final bend here, which is where a lot of people try to buy, and price is going to go up and markets were sold. Another way to think about these crazy patterns is, well, this is really what a call for investments would look like when structure starts to trick you and slowly starts to create higher highs. You see this low here? This is a low. This is a higher low. This is a higher low, right? So initially, a lot of people would have assumed that markets are going to rally up there, but we were quite clear that price was going to start selling, and it did sell and break through that structure. I'm bringing this structure up again. I'm bringing it up again because if you're paying attention on Twitter, on 365, wherever you get your information, right? I do try and post as much as possible. But if you're paying attention and you look at Luna very carefully, and I don't know which broker I drew it on. By the way, never mind. I'm not even going to give you guys any risky trade ideas here. Right. So if you're very careful, you could draw a similar upward structure just before the tearing down of price. Right. So this is a nice pattern to just keep in mind of, right? Very nice pattern. When markets start to wage up like that, be careful that the temptation is always markets are about to then on the third touch break up to the upside. And that's just a dangerous misconception. Even Bitcoin has done that several times on the same chart. It's just that a lot of people are not paying attention. Bitcoin itself, if you decide to become a patterns trader, that's one of the things you'd have to look out for, has done this several times. Right? If we scroll to your left and you look all the way up here, The first time with the strong upward structure, and then with a breakdown, and it completely went all the way down there, right? And same thing here, if I draw two upward channels, breakdown all the way to the downside, right? So when it comes to Bitcoin, I want you guys to see the COT data. I found this so interesting when I was preparing for today's war room. And I'm actually like double checking my bias into a lot of assets because again, once I get to a state of euphoria, I have to work a little bit slower to make sure I don't give back, all my gains, right? So if you can look at our COT, you know that our invested interests are with, non-commercial positions, large market speculation, which is where the broader, institutions like banks find themselves and where retail traders aspire to be most of the time. Right, so you can see that there's nothing that has changed in the tug of war from the time I started collecting this data, right? There's never a bold, clear winner, right? Just once in a while, like here in October last year, where there was more institutional selling. This was literally just before the crazy all-time high rally, by the way, right? Otherwise, we range between 46 to 53%, and that pattern goes on and on and on and on and on, month after month. A close 48, a close 50, like literally 1% to 0, something percent difference, time and time again. And if you're not paying attention, you will miss the bigger picture. Because I couldn't find anything here, I started to look at my 13-weekly average. Now, if you look very carefully, when it comes to Bitcoin, on the longs, we're looking at about 8,415 orders in the last 13 weeks on average. And only recently, right now, on the 10th of May, last week, Tuesday, did Bitcoin get a strong push above that, right? And I'm pretty sure it had a lot to do with keeping price above the support area here of 28,500. I'm saying support traders because it's important to know that there is no demand. The demand has been broken. There is absolutely no demand. Shake my hand, Lincoln. Good to see you, buddy. There's nothing. There's absolutely nothing here. There is only just support, and I don't trust support levels. But apart from outside of that, 8.4, previously, the buying has just been a little bit below, give or take. But that wasn't enough data for me to be absolutely convinced about where price was going. Right, so I started to look carefully at our sentiment difference here in the indicator, and I noticed this. This is absolutely fascinating. When I gave you guys the trade call and I took the trade, my COT data spreadsheet was completely out of date. All right, and those of you who check it out or registered would know I've been a little bit behind with this thing. I finally caught up now. But something happened on the 29th of March. Thank God. We like to trade supply and demand in its purity, right? However it is, without necessarily waiting for a lot of confirmation tools. But I found this interesting. On the 29th of May was when we had the absolutely largest sell hedge, right? From a hedging side here, that drove over 10,000 sell orders, which is actually the most net difference in sell orders on this report that I've ever compiled since I started in September last year. 10,000. I found that absolutely wild. So I wrote here, check the chart. And you're going to want to remember this date, 29 March. Right. So when I did that, I went to the chart, went to Bitcoin, I went to the H4 time frame. Wait, what happened? I had it marked out. Did I just remove it now? It's all gone. Right. Just give me 2 seconds. Give me two. Oh, sorry. It's above. There it is on the daily time frame. Right. So up here in this circle, look at this. On the 29th of March, when Bitcoin was now finally clearing those levels, breaking these lower supplies, breaching above 40,000, the whole world was going crazy. We're going for 50,000. And just when we had to break the last supply that is part of this head and shoulder pattern marked by the white trend line, right, on the 29th of March, all of a sudden, there was a need, not from large speculators, these guys came in very hot and ready to push price down with an incredibly big order. And obviously, we took the trade because, it was time to sell, price had arrived at a supply, and it was at the top of this pattern that I keep teaching you guys about. There's the date again. On the 29th of March is the last green candle. And after that, Bitcoin has been falling ever since, right? So I found that quite interesting. But what's more interesting about that is there was synergy between the two. If you go to the NASDAQ, and at the same time, this was when price institutions sold the most just before, not before the war, sorry, right? So the war started on the 24th of February, right? So this was straight after that market bottom on the 14th of March, and then with a 2-week, bull run, right? So markets, I'm bringing this up because people are saying the markets have bottomed. SPY fantastically survived a 20% crash. The NASDAQ has arrived at a proximal line, which is a weekly demand, and technically speaking, for all intents purposes, a governing demand. We're going to go to the NASDAQ chart right now. But all of this coincided, right, with the 682, like net position 682, which seems to be the most in a very long time in terms of negative orders, right? In a very long time. There we go. The last time we saw such big, strong bearishness on the NASDAQ was around the 25th of January, right? When they brought out the big guns, right? So there's a massive coupling with Bitcoin and NASDAQ, which I don't want you to forget about, right? So in terms of what I'm going to do here, guys, like I said, I am out of my cells now, and hence the sense of euphoria. I reached a very big target, and so I will not be trading this week, right? I as an investor, would like this to go down from right there. Okay, I truth be told, that's my bias right now. I don't think it's going to happen. I do believe that if markets wanted to drop from this level, they would have by now, right? Nothing is over until it's over, right? So you could get a drop there, but I'm very open to a pump to somewhere up here. But if Bitcoin is doing this, it is because NASDAQ is going to do the same thing this week. All right. So look out for that. Look out for the fact that a lot of people will assume that this whole crisis, is over, right? And maybe it is, who knows, who cares, right? The point is, if you were looking to go long on a trade on Bitcoin, I'm not going to talk to investors, you really want to be very careful, right? You're literally knocking on heaven's door here, right? We've got an interesting structure. This could be an inverse head and shoulders, so we definitely could have a good room to run all the way up there, right? And if you look on the H4 time frame, it would really require price to invasively break structure if we're to match it with this peak, right? This whole yellow zone is the daily chart. Please don't forget that. Don't forget how I trade. And I'm simply saying to you that if you're to leave it here, just be very careful about your stop loss placement, because when you do a multiple time frame analysis from the inside, there's still a lot of room up for price to still float up. Even if when we do the Akini hash, it's still incredibly like tough, right? So if you have an entry point here and a stop loss there, you could get kicked out. So it's just something to bear in mind. So if you're not really if you don't use daily time frames to enter your trades because you're not really a long-term swing trader like that, it's just something to bear in mind, right? If markets don't even make it up there, and let's say we get a 0.618, because that's your next bet, you really should be thinking about retracements right now. I don't think it's safe for us to be thinking about reversals. I don't think it's time for us to think about markets are reversing, bearish markets are over, bull runs. I think we should be looking for retracements and seeing how good those levels look like. And Bitcoin has a perfect golden ratio retracement. I mean, I'm talking about this entire area, here. This is what one who loves to kind of like take risks and, generally speaking, might potentially be rewarded. This is a very good retracement area for selling, right? So we want to see price pump up a little bit there, pump up back to that whole, markets love these psychological numbers. So we're talking about between 34,000 and 35,000 US dollars. And if Bitcoin can make that, that might be a very good place to kind of like start to sell. On the COT report, there isn't much right now. All right, we can see that the selling orders are cooling off. Right, went from 600 to 200 to 300 to 14. Right, why is this cooling off? Because somebody smart enough is buying these big dips. There is definitely big institutions trying to buy as much of these dips as they can. All right, so only when we start to see the pressure pick up again will we know that they intend to push it down. Bitcoin is going to 20,000 US dollars, ladies and gentlemen. This is something you need to make peace with. It is something you need to understand and also use to your advantage, right? You might be holding unrealized losses right now. I understand that. All right, I bought a little bit of crypto, just above 30,000, definitely bought again at about 40,000, sometime last year. But most of my crypto I bought, 2019, 2018, 2020, right? Below 10,000, right? And the thing is, the stuff that I'm currently experiencing unrealized loss is just be dollar cost averaging. Dollar cost averaging means I don't care about the price of crypto today. And so I've been buying on the highs, buying as it comes down. Every month I have to buy a little bit of Bitcoin. But for those of you who bought late and bought last year, of course, I feel your pain. I absolutely feel your pain, but it's part of your process, all right? You're going to have to decide for yourself whether you've got that long-term picture. But right now, for a good trade idea and for an investment call, this is my first thing. If this doesn't hold, I'm not even going to try and trade it. Which platform do you invest in dollar cost averaging on crypto? All right, cool. So I use a lot of FTX, which I'll be doing a lot of trading on there with you guys publicly. I definitely like to keep my stuff on Exodus. I was actually introduced to that platform by students, by the way, on the group. Previously, I was quite big on Coinbase. Excuse me. I still have a couple of crypto that I'm building a portfolio. With altcoin as well, but they're quite pricey. I'm pretty much almost everywhere, man. Definitely got a good wallet with Binance. And then I also run 2 MetaMask wallets. I hope I've covered your question there. But it's just really based on what I'm doing. So I don't like to keep money. I don't like to see all my money in one place in case that money has, long-term projects. So I like to grow those wallets, separately, in a very neat fashion. And then I also kind of like I'm running my parents' pension through one of those wallets, and me and my partner. So it's kind of like, yeah, it's a mess. Right. So that's Bitcoin. All right. So quickly to NASDAQ. Not a problem, buddy. Not a problem. Quickly, let's look at NASDAQ. I'm sorry, guys. Like I said, you will feel my energy is a bit different in today's war room. I do apologize. It's absolutely important. I keep emphasizing this. I am not the usual confident Leroy right now because I am aware I'm currently in a state of euphoria. These big sales have made me quite a significant amount of change. And the rules are I have to acknowledge that to myself and avoid making trade calls until I reset. It takes me about a week to reset, right? So I'm going to be very careful in telling people what to do, especially in a week where my own money won't be on the line. And I hope you guys can just bear with me, right? I'm going to do my best, but I want to see comments this week in the public Telegram group, questions, question me, correct me if you feel like, no, this is crazy, because it happens to anyone, right? So this, I find this so fascinating, that we can talk about the stuff in January, February, and we can cleanly map out where price is going, all the way before it even happens, and markets play out exactly like that. And then it's just up to individuals' discipline and attentiveness to make money. But NASDAQ has done exactly what we thought it was going to do right at the beginning of the year. And it has now finally arrived at a very interesting point. Let me tell you what's weird about this market, guys. It is not normal for the NASDAQ to drop 30% at the beginning of any year. Any year historically. Yes, we've hit 30% once in a long while, very spaced out. And there have been incredible reasons for that. We didn't even get a 30% dip during COVID. Right. So markets have experienced what we call extreme pain. The desperation to buy up is so much. All right, number one. Number two, we might get to a point where there is full market capitulation. I've taught on this, where we actually run out of sellers. If we run out of sellers, then Leroy and his $10 can create a green candle. Do you understand that math? If we run out of sellers, all Wall Street has to do is to start taking the other sides of the previous trades. Instead of puts, they start going with call options to pump this thing up. In terms of structure, in front of you is the beautiful journey of NASDAQ. I told you guys that once we break out of this channel, we are going to have to complete it. And we have arrived at what we at 365 Trading Academy love to believe is a significant place to slowly but surely start to consider buying. I am saying slowly because I'm still bear market orientated. That's my mindset. Today is Sunday. My mind has not changed. I am not, entirely convinced the pain is over. I am very much aware that the whole world wants the pain to be over globally, right? I am aware that inflation fears are still around, but we could have peaked, like Powell has said, even though the most recent CPI data, perhaps proved us wrong. But we'll only know in May when we start to see a cool off. There is no significant thing that's going to happen in the next 2 weeks in the markets. I've already checked that I can say is going to be a big fundamental push, right? So what could happen? What could happen, right? And Jay, one of our students in the private Telegram group, literally said, dude, I'm looking at the 10th of November and there's a significant demand. And I did a short video for the private students. And like, I hope I was clear, because I feel like I crushed the buy idea so much, and perchance it could work out, right? I'm not in the buy. I was still holding myself, and I was very transparent about that. But this could potentially be a recovery point. Believe you me, there was a recovery point on the 14th of March. You can see what happened. That rally got sold. So please be mindful about what you do with your money for the next 2 weeks. Do not be easily convinced that it is now time for NASDAQ to go back up. But in a normal structure, we want to see all of this, get filled out, get mitigated and contained. I feel like there should be enough sentiment and pressure in the markets right now to go a little bit lower. If we break this, it'll be sad for the world. It would literally trigger a very, very, very vicious recession. But we'll finally make contact with the strong demand levels that got us out of those COVID, which is what the market desperately needs. This structure also represents everything that Jerome Powell said he was going to do. He said he was going to use the interest rate hikes to kill demand. And that's been done, folks. We've seen demand after demand get broken. Not just that on the charts, but demand in terms of asset ownership. So the stock market. Oh, I apologize if something happened to the sound. I just dropped my mic. Give me a second. I do apologize. Right. So that should be good now. Right. So I wouldn't be surprised. I honestly would not be surprised if something like that was to happen. Right. So we are at some type of valid sitting point. I had marked out here weekly proximal line long before it happened. Private students can attest to that. And markets kind of like landed right there on top. And on the weekly time frame, we are asking a lot out of price. This is what I would do. I would venture out on the weekly time frame and draw a fib. Remember, like I said, right now, if I was to trade this week, my trade ideas would have nothing, very little to do with going long. Most of my trade ideas this week would be hunting for retracements for now, because again, I want to be clear, I wouldn't be able to see it even if I wanted to. I have not given up on my short-term and long-term perspective of a bear market, right? I will stop calling it bear market the moment I am convinced otherwise, and everyone will be the first to know, right? So I'm just trying to make sure I can see this clearly on the daily time frame. There's nothing I can do about the red lines, ladies and gentlemen. It's just part of the 365 trading strategy, right? So this is where we've got NASDAQ looking very busy, right? So here were two sell points, and there was heavy competition for selling. It essentially happened all the way up there, and it was quite intense on the H4 time frame, right? And that is where the golden ratio area points us to, all the way to 0.786 somewhere here. In fact, dare I say, one could consider, this being a good place to wait, but we'll have to see. This is literally a wait and see chart. You can see here we've equalized. We've got almost equal sellers and equal buyers at this moment. Bearish engulfing pattern on our left met with a bullish engulfing pattern. Someone has to give. Either this is a test of this, or this is going to get a test and it's going to go back up, right? So I honestly cannot give you guidance on that. The fact that the SPY didn't break below 284 on Friday signaled to a lot of market participants with a lot of money that the markets could have bottomed. Now, I don't believe that. I know I don't believe that. But those who believe it will buy. We've seen them many times, will buy. And I think if you're in the public Telegram group, Alvin said something brilliant today. He literally just mapped out, a very good strategy. Buy stocks now. Buy for ownership. Buy shares now in your country. I promise you, all your country's exchanges look like this. JSE, get exposure to S&P 500, to NASDAQ 100. Buy the ETFs that track these things. Now is a good time, not necessarily to buy, trade, but to definitely be as aggressive as you can in share ownership. I'll tell you why. Because if this is the bottom, you'll never get it again. You will never get a piece of the pie, this chip. If Bitcoin is going to bounce back up today, 20K is still on the table, but it's going to be a 6-month later type of situation, right? I hope that doesn't happen. I'd very much prefer we hit 20K before July this year so we can all move on with our lives, right? I'd very much prefer that than to have another annoying bear market in the middle of a very big bull run. All right, personally speaking, right? So watch out for this particular, area of value. If I was to drop the chart a little bit to H4 time frame, remember our fib is pointing us all the way up there for retracement. You will see why, because everything here is unfortunately not fresh. All right, I don't remember seeing a fresh zone. This here and this here are those two daily areas of value. And I apologize if you're new and my charts are a mess and you can't see them clearly. I would very much encourage you join our academy so you understand our trading style, you understand why all this is here. But there's some strong supplies. The competition here is ridiculous. One could argue that this final bullish engulfing structure is fresh. I hear that argument. I just don't believe that the psychological areas here are fresh, all right? And then in here, we've got a smaller area that I spoke to in the group. So in the private Telegram group, when we're talking with Jay and his question, I said, we're probably going to get a bounce there. Be careful of these equal highs. Don't sell here. Don't sell here. I'm pretty sure I definitely say that. Rather, wait for markets to breach the equal highs and then try your luck there. And to be honest, that's something worth trying this week. But unfortunately, I might be wrong this time. Folks, I might be wrong. And the worst part about it is if I stay true to my trading journal and my trading rules, Fridays, Saturdays, Sunday are not trading days. I owe 5 days of no trading, zero, nothing, finito. So I can't take this trade in case I mess up all the gains that I've made. All right. So be careful. This is a nice fresh H4 area, but it's got no confluence with the daily. That's the trick. All right. It's a very nice fresh H4 area. When you're looking at the swings on the H4 time frame leg, you might even get a golden ratio confirmation. Let's see if we do. Oh, we do. You see, it says this is what makes it tricky. And if price breaks out here and hits your stop loss, then you're screwed, because then you're literally coming back to this very, very heavily market memory area, notwithstanding there's a supply right above it, 1700. And so again, I am not in the best place to give advice this week on the NASDAQ 100. And I've really done an incredible job on NASDAQ calls from the beginning of the year. Absolutely phenomenal stuff. But now we have to see how strong this reversal is. On the daily time frame, this whole thing looks like a bullish engulfing pattern. The first thing you want to see is markets, if markets don't make it to this supply, number one, get to these equal highs and then go all the way down to retest Then you want to see if that's a retest of a bullish engulfing pattern, and potentially you want to take buys there. All right, so that might be an easy trade call to make. But please look left, look right. Sentiment, what's going on, is Putin doing something stupid, etc. But 11,800, 11,900, 11,800 might be a very good buying place. Okay, and for someone who just wants to make money this week, that might be a good place to wait. For someone who wants to make money this week, that might be a good place to wait. But we'll see if it lasts. But if markets, and this is what people miss with signals, and at least how I'm saying, I literally say price has to only arrive at the highs, not make contact with the supply. Turn before making contact with the supply to come test it. If markets make contact with the supply, this demand here could work, but you're not going to get a lot of room to the upside. You're not going to get so you better know when to enter. But if markets turn to come make contact with the supply before going, with this demand, before going to the supply, then we can assume that we're in a market bottom range. And lastly, before I start dishing out some signals, the chart I keep referring to, the SPY. This was the chart of the week that I asked you guys to kind of like study. And you see the SPY made an incredible, just in case recovery, almost like as if this is a video game to smart money, right? Literally leaving about 0, something percent before this thing crashed 20%. Once an asset in the stock market reaches 20%, it is officially a crash. And had the SPY broken the 384 level, we would have naturally known that long term is terrible. I still think this is a mind game. I still think that this is a law to call buyers in. I'm pretty sure the SPY will crash. I still believe there's a long-term deeper pain coming. I still believe the recession has been priced in. And so during this week, when I'm not trading my own money, I'll be doing a little bit of, or I honestly will take 2 days off. I've been working very hard in the background for module 3, preparing my bum for module 4 with the live trading psychology stuff. I will be taking 2 days off this week just so I don't feel burnt out. And in the last 3 days, we'll be doing some admin work. But I'm hoping that by the time I come back next week, there's a lot of market clarity. It will also be a good week for me to make a lot of videos for you guys, right? The more clear my head gets, I promise you'll get an update. But it's just stuff I thought you'd like to know. Right, so we've looked at a couple of things. And the last big thing that I wanted to show you guys was the JPY index, the COT data. It was hilarious. Look at this, like just clean. We've been talking about the reason why, right? These guys have been short calling this thing from a long time. JPY is time and time again, the Bank of Japan kept saying they're going to keep, we could keep the yen extremely weak to ensure that globally, right, things work the way they do, which is good for the economy. But at some point, the buying that needs to happen here to recover the yen is going to be incredible. But if you look at the DXY, which is the Japanese currency index chart, which is the last chart I wanted to show you in relation to COT, it's absolutely incredible. An entire governing demand has been iced out. And now I'm going to say something that sounds crazy. I am going to say something that sounds crazy. Are you ready? I am so committed to this idea of a bear market, recession, stock market crash that I'm telling you very soon, the next chart to do this is EURUSD. EURUSD is going to take out an MTP, major turning point. And that is a significant moment for an asset. Right, when you start to look for new lows, when you start to signal things are effed, right, this is what the world looks like. And I am absolutely sure about this, right? I am absolutely sure that I am in no rush to start looking for euro longs. I am in none. I'm also worried about how low, we don't know. We don't even have a scope as to where the JXY currency is going. We're literally going to be taking directive now from a policy stance, right? So BOJ, I told my team on Thursday last week actually, that we now have to track BOJ stuff the same way we track American stuff. because we will only know that this is done and the big reversal is coming from the reserve chairs as mouth, right? But right now in the daily time frame, if you're trading things like EURJPY, pound JPY, this is what you want to look for, right? You want to look for the ending of this retracement. So after they cleared this demand here, I'm using a Kini-Hashi candlesticks because normal candlesticks are so gapped, right? So gapped, it's difficult to read, right? And I'm saying, look, man, you know, if this doesn't hold, if this holds, then cool. We know what's up, right? Markets are just going to keep going back down. And it would be nice to see it not hold. It would be nice to see all those assets cool off, all the buying on pound JPY, euro JPY, just cooling off a little bit, just so that you know this index can gain a little bit of strength, and then we start to see a stronger sell side from somewhere up there. That's kind of like what I'm hoping to see in the markets, but because the markets are not my little kid, this could even happen right now. This could be it right now. And here, guys, I don't know how far it's gonna go. We're gonna see it. We're gonna be told. We're gonna see an original turn. All the stuff that I've taught you guys in module 1, right? This is when you put all those different types of supplies and demands together. But look at this. Like, so last week Tuesday, there were 91% shots, right? And I should have done a weekly average, but I can do one quickly actually, right? There's 1, 2, 3, 4, 5, 6, 7. I've lost count. Let's say 7, 8, 9, 10, 11, 12, 13. Yeah, 15 February will be week 13. I'm just going to come here and see what it says. And you can see on average, 16,000 orders would be your longs. And you can see we're very much below average. Well, there's about 11,000 longs. And on average, if they were to try and strengthen the currency on average, they should be like trying to buy above 16,000 orders. And they just only did 11,000. And on average here, which will be the last average I do because we need to move on all the way to the 15th of February, right? You'll see, right, on average, we're looking at about 10,000 sell orders. That's the normal average. And they're selling above average, right? Hence the 91%, right? So right now, you know, all things are a little bit tough for JPY by design, right? This is literally how these guys make their money, right, guys? So that's kind of like the market overview I wanted to give you guys. And for the next 45 minutes to 50 minutes, just before 6:45 is when I need to stop. Otherwise, the noise in this house is going to be unbearable tonight. We've got a couple of people coming over. Whenever one of us does euphoria, then the whole trading flow is only 12. Like the actual traders that I work with, they show up for dinner and we go to anyways, everything's happening at our house today. Right, so let's start off now with our currencies and see how far we get before the noise level starts. The first one that we have not looked at in a very long time is AUDCAD, and we want to find out what's going on, right? So you remember AUD had this crazy strong run even when we wanted it to sell, and then it eventually finally arrived at a supply. There we go, all right, tickled any type of stop losses and then trickled all the way down. We had some red zones here that I'm going to remove. They potentially represented cowboy plays where you should not have bought, right? So there was this bullish engulfing pattern, cowboy plays, all of them got completely exhausted. And then with this one, lower demand also completely burned out, right? And now markets have completely equalized all the way to the bottom, right? So let's start the entire mindset all over again and see what we have here. All right, it's actually nice that we've got the COT up to date. We can actually sometimes just quickly do a quick cheat sheet and see what's going on here. All right, so there we go. They've already started to build their buys and they're already at the bottom, but let's see what's going to happen. More shorts than selling in a very long time, and that's how obviously price got to the bottom, right? They cooled off their sell positions, but even while cool, the sell positions were much bigger than their longs, all right? So this is kind of like AUD across the board. AUDCAD is a different ball game because CAD is linked to oil, and I'm pretty sure oil, even till today, is trading above $100, probably 110, 109, at least according to my 7-year-old yesterday. And I'm not even sure, I didn't check to see if I believed him. Sometimes I ask him these random questions to see if he's doing his daily routines. He's supposed to keep track of. All right, so yeah, there you go. He wasn't lying. There you go. So at about 110. Well done, boy. He was not lying, right? So 110, right? This is still an indication, right, that things are not that great in the world, and won't be for a very, very long time. Right, sell-off week ahead. Goldman Sachs, blah blah blah. Doesn't matter. Right, so oil is doing well. If oil is doing well, CAD will always do well, folks. That's the rule. Please don't forget it. Now look at where AUDCAD is, and I have to tell you, this is these type of setups, I hate trading them. The ones with the long wicks on the governing time frame, because price can really go deep looking for a bottom. Price can really go deep and still be right on the buy, but go really deep. Like, to fill this whole area up is absolutely pedantically annoying. And Akini actually doesn't make it any better. Right, there's a high chance I'm not going to make a trade call on this. If I was to make it look a little bit presentable, it would look like this, which then to me would signal a little bit more downside, right? So where we want to sell, we want to push continued selling. Here we are on the weekly time frame, matching the previous, reverse supports, which was a very, very valid demand we had here on the weekly. All right. Markets coming down, breakings of structure previously, and then eventually, this could be a very good target long-term for price. Very good target long-term for price. But for us to catch a sell, we're going to need markets to breathe a little bit. To there. Right? And this is on the weekly time frame. On the daily time frame, this is what it looks like. I don't have a bearish engulfing pattern. Please be mindful of that. And I bring that up because it's just important. Not all supplies and demands are equal, right? This is a valid supply, but it's not the same, right? Then we've got complicated 365 candles right above that then created a higher supply. And if you know me, then you'll know that since I'm not trading this week, I would love to pluck a pending order here. And just wait. Like, I'm in no rush for that. And this would take like a proper trade. So this would be my dedicated 5% of my trading rule, if my capital would allow, blah blah blah, all those rules being met, please. Right. And then maybe, out of curiosity, I would, do a 2.5% here, basically go much more smaller lot size for an increased area. But before I do that, this area here, this big daily supply, I would go H4, H2. I would literally hunt for the best place to sell inside to kind of like restrict that, right? So you can see that this particular supply in here, markets made contact and dropped. I wouldn't even care for it, right? Potentially price could make a fresh supply, and this is it. This is what I would do. We have an entry there, undoubtedly, and then now we have to do some maths, and I'll show you why. The first zone, which is a very big zone in the daily time frame, is give or take big, like 145 pips, right? And you just pull out your calculator, bro. You pull out your calculator and you're honest with yourself, and you tell yourself, hey man, this is all I have. Where's my calculator? Right there. This is all I have. I don't have any more money left except for this, and I have to be very smart about it. That's kind of like what your capital represents. So for 145, if I was forced to take that whole daily zone, I would know I'm risking 145, and I would need about 600 pips back in a swing trade so that it's at least 1:3. I'm running up numbers, all right? But what if I was to take an entry from this H4 area and then only have the stop loss outside this area so that I don't get stopped out? That zone is 164, right? That's option one. Option two is to have two separate positions, just knowing that you run the risk of being stopped out here. Why? This supply is very close to a higher supply. But when you narrow stuff down like that, you get a smaller zone. So you get about 66 pips for this particular zone and this area. And you need to know this. You have to know this. You have to justify. Your account doesn't grow due to your high win rate, right? If you're taking poor risk reward trades, I promise you it won't grow that fast. And the day you have a bad trading week, all that effort will disappear, right? And this area is about 75 pips, right? So the two put together, 75 plus 66, I'm going to run it up to about 140. Could be more, could be less, but about 150 pips, give or take, right? So now I know. Then you come here, you come to the money calculator, and you tell yourself you've got AUDCAD, and the first zone is 66 pips, and I want to do lot size. I want to do my lot size stuff. Right, sorry about that. And you really want to know the maths, right? You put in your account balance and you tell yourself, well, how much is it that I want to risk, etc., and you calculate that for yourself, and then you take the trade. If it makes sense for your capital, there will be many trades along the way in life. There'll be multiple opportunities, right? You calculate it here, blah, blah, blah. You hit calculate, you figure out your points. Then you come back to the PIP calculator and you do the same thing. You find out if the trade is actually worth it. Please do not be lazy to do this simple math. It is absolutely vital for you. But for a simple trade idea, for me, I'm going to wait for the one right above, knowing for a fact that when I do that, I run the risk of price leaving without me. Right, but I honestly do not see the need to take that. So on the daily time frame on normal candlesticks, I could potentially rather run with two potential sells, one all the way up there, which I'm pretty sure might get run down, stop loss there, and one right there. So that's what I would do. But I'm still potentially very bearish on this market. It seems like no buying is going to suffice. I'm sure you guys saw at the very beginning how it looked like. We need price to come back somewhere up here. You also run the risk of markets leaving you behind there, but I definitely will not be taking that obvious trade. This is too obvious, too low, with two perfect sell high opportunities, 5% here, 2.5 there. Okay, moving on. I have to move on, guys, so we can get as much charts as possible tonight, but I guarantee you we are going to be very busy this week on the YouTube channel, right? I just need to take a break. I need to really kind of like just reflect and enjoy, a little bit of peace and quiet. Monday, Tuesday, or just Monday, maybe just Monday. We'll see. Right. So markets like on the Swiss franc JPY, like clean buys, markets ran, and I'm pretty sure we are now waiting at the bottom. Now, the problem with this particular chart is it represents a couple of complications for us. We know that JPY is weak. We know that JPY is falling off the cliff. And so this chart presents a very, it makes sense why we've always been on the buys, since the beginning of dawn, when I've been covering this chart this year. But what's interesting to note and remember is Swiss franc is also, being hammered right now, fundamentally because when you have to decide between a safe haven, if dollar is chosen, if dollar becomes strong, Swiss franc always is the one to suffer, right? So in general, according to most asset classes, Swiss franc is quite weak, and you can see, that has been very consistent. For a very long time, our sell side on the institutional side has been extremely severely strong. They built it up just to break it down. All right, they built it up. And then just the sell side orders from 12,000 buy orders to 32, 29, 30, very high 30s going to 40,000 sell side orders, right? So just be very careful that this represents a very complicated relationship. That being said, markets arrived at a major turning point. Reason number 2 to be careful for. When you get to a major turning point, we do expect sell pressure as long as that supply is not yet broken. And what happened was we had a governing structure that signaled just that, right? So we might be looking at a couple of weeks. We were already at 3 good sell weeks, in the past, and we've got some potential buy areas at the bottom. These buy areas, just be very careful that if you do take them, they are a part of a long-term sell setup, right? And that is to say, retest, drop, right? Retest, drop. That's a real possibility. If you look at gold after the all-time highs, if you look at most assets after breaching all-time highs, This is a very common thing. Look at copper right now, where price is at. And what I want you to know is, if that's the case, if that's exactly what's going to happen, then you need to know when to get out of these buys, and hopefully you're in the rotation when it's not time to take the sales. Another thing to bring to your attention is today is the 15th of May. So it's halfway through May, and this is the red candlestick. We still have 15 days to go before this candlestick closes, and it's already looking full. It's looking like a full monthly candlestick. The wick is out, and now all markets are trying to do for the next 15 days is to decide where this red candlestick closes. Does it close up here, meaning there's going to be a pushback, or does it close all the way down here, meaning there's still going to be more downward movement for the next 15 days? Something to be mindful of. Your trade idea is the one that forces you to wait for a couple of confirmations to happen. And how we get to that is through multiple time frame analysis. On the weekly time frame, you can see there's absolutely nothing to do right now. There's just nothing to do right now. If you're not in it, you're not in it at the moment. On the daily time frame, that's when things get a little bit interesting. Okay, so on the daily time frame, we can see that Friday ended up being a green day, and it will be interesting to see if Friday can give birth to a good retracement. Right, if Friday can give birth to a very good retracement, this white line highlights a break here, imbalance, markets entering a new supply and then falling. Right, this was like a simple trade idea. This was just easy money. Okay. And I closed. I took it as an intraday trade, and I swung it for a couple of days, and I closed out after we broke structure there. But what you really want to kind of like really be focused on is, where is this retracement going to go? Is it done? Is it going to go any higher? And if so, are there any entries to find, specifically on H4? And you can already see we've got some interesting things here. So the 50% mark of our Fibonacci, wrong instrument, is by break of market structure. And we know that a lot of retail traders are going to be going to look for some sell setups there and calling this a support slash resistance type of, flip zone, right? And we know that further up here is our golden ratio area. So I'm just going to mark it like this. And then we're going to see what we're going to find in the H4 time frame, right? But that's what it is. That white line represents break of market structure, and that's a good place for a lot of retail traders to try and sell, especially when the fib has confirmed it. But we will not be selling because of a couple of lines. We want to sell at value-based, supplies, right? So when we do that and we extend, remember this is our golden ratio area on the Fibonacci on the H4. We get a couple of interesting plays here. So I'm just going to tighten this zone and do something like this. I'll still get a clean imbalance and a fresh touch. And we might even get a retest to the zone, but these are complicated 365 candles. So remember the rules. It is generally not safe to trade them, after a couple of hits, etc. But on normal candlesticks, we do have a bearish engulfing pattern that's only been hit once, and we know that's safe, right? So I would be watching for a couple of plays this coming week on the Swiss franc chart. Number one, this is a possibility, but it comes with a lot of risk. Number two, and by the way, I would ignore it personally. I'd rather let price leave without me, right? Number two, I'll be looking at how markets equalize at these weird highs here, how markets interact with the so-called break of market structure, and how markets scale up. And I'm hoping that markets make it all the way up there, and then I would be looking to sell again, somewhere. That would be my play on Swiss franc JPY. Okay, Euro AUD is our next chart. Looking at time, it's 6:10. Really hoping I get through as many charts as possible. I'll never forget this beautiful buy entry that I missed. And I think the theme this week in the private Telegram group was actually spread. Yeah, you guys were talking about your orders not being filled. A couple of you shared some charts. Let's quickly talk about that. Know your spread, guys. I know it's ironical that I'm saying know your spread when there's clearly a trade I missed here, but yeah, I just literally forgot to put a pending order. Okay, here, right. But know your spread. So let's just quickly explain. Let me explain why a lot of you guys, and I'm so happy because what you guys were sharing on the private Telegram group this past week in the lending group was great because you are okay with market direction. That's fine. These small things of not being filled, we can fix them. It's a different story when you don't even know where price is going. And I'm very encouraged that you guys are not. It's beautiful, and you're starting to see the stuff, right? So this is how you and by the way, you're gonna see I've made a change, a small slight change of rule, even for swing trade. We are going to be using 365 numbers in currencies. But let me not spoil it. Like I want to teach it properly when the time comes, right? But it's just remember, back test everything, right? So let's say you've got your pending orders. Those of you guys who are setting pending orders. With the time when we start sitting down one-on-one, and if I look at your statement and your trading journey, and from you, and you tell me, dude, out of 10 trades I'm taking, I lose about 3. Okay, I win about 4, but the other 3 are not even getting filled. Price leaves me behind. We'll talk about it, but deep down, number one, you need to find out what's going on at a trading psychological level. If your area of value is too tight, this is fear, right? Fear / being stingy, right? You don't want to put too much money on the line. You never met those people who negotiate everything. They've got that negotiation mentality. They go everywhere. Everywhere they were taught by someone that in life you can negotiate the price of an apple, negotiate the price of a shirt, negotiate until you find them trying to negotiate the price of fuel by the garage. And that's how sometimes that can be translated to your trade. Not that you do it, but I'm simply saying that's what it looks like. So let's say you've got a clean area of value, right? And your rules have been met on that area of value. You know all our 365 rules, blah, blah, blah. And now your job is to simply come and take the trade. You want to take the trade because you've planned the trade, you're waiting for the trade, etc., etc. And this is what it looks like, right? Remember, there's a big difference between your proximal line. I'm going to make your proximal line yellow. Let's keep it simple for those people who don't trade with us or not in our academy. I'm going to make it blue. Why it's not changing color? Right. Your proximal line is basically your entry point. Let's call it that. Right. For those of you who don't understand, the lingo, we don't want to be to isolate you. This is your entry point, right? Your desired entry point after you found an area of value in it that is confirmed by either a supply or a demand, right? And then your distal line is where you're going to place your stop loss, right? So we understand exactly what we're doing and why we're doing. So there's your stop loss. Your area of competition, ladies and gentlemen, is the most important marker. Your area of competition represents where the titans are going to fight for entries, right? And that's always, generally speaking, at the opposing candlestick within that sector. So if you want to go up, the last red candle and the wick up. The difference between these two in terms of area of competition, 9 out of 10 times, 8 out of 10 times, but it's a very high odds number. Generally, the distance here always generally makes up for the spread. All right. That's why I go by area of competition versus proximal line. I do that knowing that for the fact that I'm actually opening myself up to risking a little bit more than I would like to. All right, so I'm buying it. If I get there and the car was worth $10, I'm getting to the dealership and offering $10.50 no matter what to get the car. Because I'm saying to myself, the car is more valuable to me. I'm willing to pay 50 cents extra. I know that I'll make more money later on in life when I sell the car. And obviously a car is a depreciating asset, so that's a terrible example, but I hope you get the picture. So your area of competition is your first marker to your proximal line is. The moment you see yourself marking out your area of competition correctly, and still you are still being left behind. You get it, Leroy. I knew it. I knew where price was going, but hey, this is painful. Markets left me behind. And you see, like weeks later, that was a perfect swing entry. What I want you to do is just the same as we do with NASDAQ. You remember how the rule with NASDAQ is, or not just NASDAQ, indices, right? We want to have a 50 to 20 point variation from our areas of value. 15 to 20 points. And if you notice, NASDAQ always rotates around 20 to 25 points from that 363, oh my goodness, 365 number that we always talk about. The same with your assets. The moment you have your proximal line here and your entry point, just give it an extra 5 pips. But just make sure your broker is good, man. Make sure you've got a good broker who doesn't have wide spreads, right? So you check the stuff on the 1 minute time frame if you don't wanna, if you want to see, the difference between the bid and the asking price. Just really make sure that your broker spread is normal, all right? And then just this much will make up for this extra, pipplage here, in the rally later on. You will always make up for this business expense. As long as you're following our trading rules, this is nothing to kind of like hold on to. All right, this will help you a lot. Okay, I'm glad that's kind of like dealt with for those of you who came by. But you're gonna miss a lot of trades if you're not, marking out your areas of value and accounting for the spread, right? So guys, the last time we spoke about Euro AUD, we did mark out this area, but I told you that I'd love to sell all the way up there, a little bit higher. And you can see markets have arrived at the sell point here, and potentially markets could be going all the way back down. I doubt it. That's why I don't want to sell there. I really doubt it. I really doubt it. I suspect that markets are coming up here. All right, so there's some short-term selling going on, right? And I think some of you are actually in these sells, and that's beautiful. That's very good. Just know when to get out. Some swing trades last 3 days, some last 4 weeks. All right, just know when to get out. Make your money, but know when to get out, right? The real sell is above us, ladies and gentlemen. The real sell is above us, but there are absolutely some potential sell orders here that we marked out the last time we were together. And Monday is actually going to be the test. Because you see, on Monday and Tuesday, price will either break market structure, closing down below this week, right? And that would not allow for sellers to be out of the woods. I can tell you that right now. As soon as markets break a little bit down here, you still have to deal with some potential strong bullish momentum, right? This whole area down there. It's not necessarily joined, but I'm just simply saying there are 2 strong buy zones in there, right? So markets might actually simply break structure just so that they can land into a demand and then start to erupt to the upside, right? So those of you who are selling, I honestly believe I saw a screenshot. I think someone was saying thank you 365, and I appreciate that. I want to say it was Nicholas or Nick something, but I could be wrong. Maybe my memory is failing me, but just be very mindful of the fact that long term, right? The long term trade is at the top, and for it to be at the top means markets are going to bounce back soon, right? So that's why I was annoyed with myself for missing this buy, because if I was trading this asset right now, I would very much would rather be holding a buy trade, even though people are starting to sell against me, and then hope that when markets get somewhere here, right, the market starts to reverse to the upside. So it's definitely something to keep track on. I still want to sell up there. I don't want to sell anywhere right now. And if I do ever get the urge, the itch to buy this thing up, I might. I absolutely might. But right now, we are kind of like, tracking on track all the way down. And then sooner rather than later, for the next few weeks, we might be making ourselves all the way up. It will all just depend on market dynamics. Remember, if everyone is right about the bottom, the SPY, the recovery, even if they're right for a week or 2 weeks, things like risk-sensitive assets resuscitate. So you start to see euro strength again, right, resuscitating. And that's why I'm saying, just observe the bigger picture on this chart as well. But yeah, the bigger picture is, I'm not in the trade, not trying to be in the trade, but as soon as I want to be in the trade, I will want to be in the trade here. This is when and where and why I want to be in that trade, and maybe just to clearly mark out that zone right now. So I'm removing these sell lines, and I'm just going to put them there. This is where I really want price to be. Markets are now on the other side of these long-term trend lines, long-term channels, and potentially no one might even care about this chart for a very long time, which means we might get a very, very, very good long-term sell. Okay, we might get a very, very good long-term sell if markets are allowed to do what it is that they seemingly want to do here. And it seems to me that they might want to, bounce, drop a little bit, right? So this is what happened. You can see here, actually, is a very good lesson. Let me remove this red line, right? You can see where markets turned. It had nothing to do with the zone. The zone is all the way down there, all right, which is a correctly drawn zone, which means there's still more downside to it. That's number one. You have to know this. But markets turned immediately at the area of competition, right? And once you understand the difference between the two, you then realize why banks will always leave you behind first, even if you are now a proxy supply and demand trader. If someone doesn't teach you the stuff properly, you'll still miss out on a lot of movements. On the weekly time frame, we've got somewhat of a reversal pattern going to the upside. On the weekly time frame, it's also the first time we're starting to see a clear supply within a supply, which is somewhere in there. Somewhere in there on the weekly is where markets are going. All right, markets are heading there. And even with the weekly, I'm going to use some wisdom and sense and keep that area very well highlighted there. And eventually you get to a daily entry where it always gets complicated, right? Markets always get complicated here. We've got a beginning point there, and then some sell high opportunities all the way up there. All right, and there's a lot of yellow. I get that, but my point is, if you're looking for where the money is, right, I think there's more money on the sell than on the buy. We've got Kinehashi for answers. And if we go for our Kinehashi for answers, then this is your true sell. Give me a second, will you? So I'm going to say S1 plus confluence with W1 plus BT1, right? Daily truth supply 1, okay? And that's just for me to know that, look, Leroy, you've done all the work here on this zone, and this is it. And in fact, I'm not even going to put a line on it. I'm just going to give this an entire zone. Make the boundaries yellow. Sorry, guys, just doing this for myself is also that I know where to put my pin in order. Right, and then we'll see what happens. So I'll probably have an alert when price gets this white outer area, and then I'll start, tracking, movements, sooner, or at least close by. But this is a potentially good trade setup, right? Very good trade setup. That's Euro AUD done. The next chart we need to look at is EURJPY, and you will recall what we said about the Japanese yen. You have to love this kind of stuff, man. You do the war rooms, make all these cool projection lines, and you come back a few weeks later, markets drop, markets hit, markets fall, right? Markets have literally done most of the stuff that we predicted they were going to do. And the question is where to now, right? So you can see, guys, as JPY was falling, as that weakening was falling, Euro took advantage of that, right? Literally, just chowing it and going all the way up. And it's kind of like, the end of a parabolic structure-ish, which is what we want to see with the dollar soon, right? And now we've got a lot of questions. Where will the fall end, etc., etc. So I'm just going to remove all these things here, and we can really catch on with the analysis. There's not much that needs to change. So far, we've been very much on track. Right, on the governing time frame, very interesting. We've got equal highs. Well, not that equal, but equal-ish, right? We've got some swings, some clear swings, right, where markets seem to like to revisit, etc., something like that. And for me, when I see this, in my experience, you just ignore it. Ignore where retail traders are going to try and trade. Retail traders love trading at equal highs, but they don't understand that equal highs then really mean there's a lot of balance. And you don't want to trade at a place of balance. You want to trade on the outskirts. You want to trade on the imbalance. You want to trade where price is heavily skewed to the downside or heavily skewed to the upside, not at a place where we can all sing kumbaya. Right, so I do expect the upward momentum to eventually continue, and then maybe somewhere up here we can slowly start to think about selling. But if this candlestick, or 15 days to go on the monthly time frame, and it's already looking like this, if this becomes just a small tiny red candlesticks, then remember that this is where they probably started planting a lot of buy orders. All right. I know Euro, I skipped filling up for COT because I'd recently done it for a video. Oh no, I did. Jeez, I worked overtime this weekend. All right, I thought I skipped Euro. All right, so just be very careful. All right, there's really not much. There's not much to tell you, but on the dump side of things here, markets are still the same. And on the exchange of things here, markets are still the same. I don't even trust that I've done that correctly. Can I just do this quickly? All the way to the 15th of February. All right, so 21,000. And so they've slightly got slightly above the usual buy orders, right? So just be very careful. If you're looking for long-term sells, I'm saying I don't think price is going to stay red, especially against the Japanese yen, right? So, I mean, for all intents purposes. And so because of that, I'm definitely happy to see price fall. I completely acknowledge that, but I'll be watching for some good buys. Right now, look, on the weekly, there isn't confluence with our first buy level. And to be fair, it will probably be okay for us to get liquidated there, for just being too greedy and trying to buy, high instead of waiting to buy low, right? So the next fair place for price to actually make a very strong turn from is all the way down here. Okay, and I'm not entirely sure if markets are going to go all the way down there. All right, so there you see we've got nice confluence with this daily, area of values sitting on top of a weekly demand, very clearly in balance, etc. And so I would mark this a cowboy area today. Now that we're finally closer to these trade calls that we made a couple of weeks back, right? And this simply means there's a lot of risk being carried in this zone, and I'd highly advise you ignore it. But it could also be extremely profitable. So I don't want you to miss out. But it's just not ideal in this particular circumstance. Okay, that is EURJPY. That's where so I specifically will be looking to take some opportunities all the way down there. And it looks to me that if the cowboy zone was to work, it would be a product of a very strong retracement area. You see, 50% to 0.61, but I would very much go with the 61.8% to 78, which is for us at 365. That's our golden area, based on all the back testing we've done. All right, so that's EURJPY, Euro Pound. Geez, man, this thing, such a disappointment. A little bit of money was made, but eventually, the next sell, I'm pretty sure I spoke about this last time, got stopped out as this thing just raced for the moon, right? Literally just kept going up and up and up and up, and then eventually arrived at a higher supply. But by then I think I was just over it. I think that was just my attitude, because this was good. And remember, I want to go all the way down to the next demand, the real demand. So I'm blinkered. I know I'm blinkered. I know it sounds like me with pound JPY last year, right? So I couldn't believe that's all I made, even though this was a lot of chunk change. I tried to sell again here, right? And that yielded to like a 4 to 5 day hold before I got it tremendously stopped out. And then after that, it's just been, is what it is, right? But we spoke about this level in the previous forum. So if anyone took it, good for you. Good for you. This could be the trade, right? Right now, I'm waiting. But what I'm going to do is, some of you don't know this, but if an area of value is too big for you, especially on indices, right? And you don't know because I haven't told it to you yet. You will see this kind of stuff in module 3. What you want to do is you want to ignore the true sell because there's always going to be a lot of money. And you want to then get the confirmation trade after the trend mindset has been set. So I missed this one again, but there is now a new supply that's been created, is what I'm trying to say. And I don't want to miss the new supply. I want to make sure that I am part of the setting of the new supply. And in exchange for that, I don't have to hold the previous original size and value of the first place that tried to sell from, right? And so that's all you want to do. Start to draw a good, clean, multiple time frame analysis in that area, And then if you're lucky, right, markets might come for you. Right now on H4, we've got a tricky situation. Markets are now breaking off to leave. Okay, but we've still got that area there, and that area seems to hold very well. Very, very well on the 2 hour, very, very well. It's fresh. It's within confluence, right? Boundaries of confluence. And you could get a very, very, very nice fresh touch somewhere up here. Right? Granted, my entry point in all of this will be somewhere here. Right? EURJPY, Euro Pound. Right? If I get this again, guys, please note that any sell positions I get, I either have to find myself in a situation where I'm forced to sell. Okay. Otherwise, I do not want to sell out of Euro Pound sell setups, right? So I'm forced to take profit, is what I'm trying to say. I do not want to be in that position, but sometimes it happens where I can see that markets are completely reversing against me. So ideally, if I enter here, this would be again another attempt for me to really hold this trade all the way down. I don't care how many times they keep pumping the markets up, trying to find a better place, a higher high, whatever. I just want to be with them when they really dump this asset, right? And they will. This is coming down. That demand level that you see here, this is definitely happening, right? So if markets fall the way down there to there, that would be great. This is definitely happening. But at some point, if this area doesn't work, we're going to have to clear our thoughts patterns and maybe accept that markets might need to go a little bit higher, just a little bit higher, and that would be sad. But we'll talk about that when we get there. Euro USD, I think I've warned you guys many times, right? That do not flirt with danger. Do not assume a strong euro. We have no right to. We have no right to. We have no reason to. All we've seen is broken demands after broken demands, strong reactionary supplies. We've also seen Euro USD lead the way with risk assets, currencies, AUD USD, Pound USD, all those type of situations leading to kind of like the downside, right? So I personally have not even for a single day thought about buying this asset and would not advise to. But remember what I said when we're looking at JPY, and I said Euro USD is going to be the next chart to kind of like look like how the Japanese index was looking. But the Japanese index looks that way as per mandate of monetary policy. All right, it is to its advantage that it's cheap. Euro USD, on the other hand, just to me looks like an asset that is in pain, that is taking a beating and will continue to take a beating, right? And then it's still a sad day to realize we're in clean, long-term sell side positions and from last year, and I ended up closing them because this is not over, right? This is not over. This is not safe. This is not over. Some of you are going to be buying what we call a dead cat bounce in the markets. A dead cat bounce literally looks like a cat, like Friday was a dead cat bounce. Markets just bounce, but we expect the continued selling to continue. On the daily time frame, we have a very classic textbook sell setup right here, all right? And anything goes here, all right? It's very, very possible that this could be a strong sell setup. So just be mindful of that, because if markets were to sell from here, right, they're literally making their way down. And I've just put this purple line. This is I don't know if markets break here, guys. I don't know where price is going. There's some things that I just can't tell you. This is now up to the banks. They literally have to create an original area of value. All right. Oh no. Okay. No, we do know. I apologize. We do know. We absolutely know where they. Oh. It makes me want to sell it even more. Oh my goodness. You ever seen a picture of someone and you're like, they're okay, and then you see them in person, they're like, oh wow, no, they're actually really pretty. This is it. Right? Euro USD sell was just okay. Now it's like gorgeous. Now I really want to sell, because if this channel continues all the way down there, I've done this analysis before. That's why all these red lines are here. All right, we know where they're going. Trust me, this thing is not strong. It will not be strong. Do not be fooled by a 2-week rally. a 3-week rally. Don't be fooled. They might not even give you a 2-week, 3-week rally. We're going to continue selling. And I've been a snob. I honestly have been a Euro USD snob, waiting for the perfect sell setups for swing trades, but at some point, either we get triggered by our snobbish levels, or we simply find good intraday setups and we start to swing them from that place, right? It's just that intraday setups normally get burnt out quite quickly, right? I will tell you firsthand, I want nothing, absolutely nothing to do with the stuff in here. And that's just my OCD. I want nothing to do with a trading zone that looks like everybody, was kind of like involved in. All right. So maybe if we get a bounce in the stock market and people are doing whatever they're doing and we finally clear this area, this would be very nice. I know I've marked it red, and this is fundamentally due to the fact that all the selling and the highs here are very unequal, and this one actually went all the way up, almost indicating that it might have even exhausted the entire supply there. So this is why this is a red zone. I don't trust it. This is maybe unfair, although it is not, too off the books. It is marked red because it is not necessarily the perfect setup, fundamentally because it is a reaction to a supply and a new supply was created. But this would be a good place to sell Euro USD. This would be a very, 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 very good place to sell Euro USD. But we don't know yet if we're going to get that type of drive power to the upside first for this thing to sell. But if we do make contact up there, I'm definitely destroying it. And I probably would want to see what the H4 area looks like in this cowboy area. Bananas in pajamas. Yeah, look at this. That's just not nice, man. It would be nice if there was just a higher area, just above this aside. There we go. This is what's going to happen, right? So I'm not going to sell in the red, right? I just fundamentally feel like this thing, but I feel like markets are going to wick into this area of value on the 2-hour time frame. Mark my words. If markets are in a rush to drop, they will probably play with everyone's feelings in the red zone and then quickly move on to kind of like trigger some serious selling in the zone above with a wick. All right, so I definitely will have a pen in order here. I'm gonna mark it white because it's just it's a very weird trade setup. It's not really how I always trade, but logically I understand why. I repeat, markets will potentially come into this zone with the white area in the yellow with zero confluence, or with the wick breaking all of the supply here and then forcing itself down. If that doesn't work, I'll take a loss here personally and then just simply go wait up there, right? Simply go wait up there for a better sell setup, right? Simply go wait up there for a better sell setup with a daily and H4 entry, right? Okay, please don't say I didn't tell you. Will I be buying the Euro strength? Probably not. That would mean I need to trade this week, which I already told you I can't personally. Number two, I'm not a big believer of that. Man, I find it a beautiful, just stunning recovery of pound JPY. Very much happy, good money. Finally, like it takes forever to get a big part of your trading psychology, right. Anyways, strong right to the upside, made a big public post about it, explained what was going on, and now we're trying out this zone here. Took some profits, closed one position from the swing is still opened a new position there so that, a little bit, so that the count is growing, doing well. Once again, I had 3 positions from here, or 2 actually, sorry. One closed all the way to the top, with the other one is still running, right? Just locked profits just below, and then we've got a buy 2 here. All right, and I'm pretty sure, if this is all going to be based on that turn. Remember, we saw the Japanese index. I said if this happens at the beginning of the video, if the DXY wants to do a stronger recovery, for example, coming in all the way up there, then I'm going to have to close my buys on pound JPY. But if the JXY drops right now immediately from the zone, then everything continues back to normal. All right, everything continues back to normal. It goes on to its normal weakness, and all I have to do is just manage my trail stop for my one of my original buys, JPY, and then also then start to kind of like break even out of buy two, which I should do soon. I haven't, because it hasn't been that long, right? It literally has not been that long since markets triggered me into this buy trade idea, right? So it's just been about 48 hours. I normally break even, at least after about 4 to 5 to 6 days of swing trading, because I need structure to create higher lows, etc., and 2 or 3 better order blocks, right? So once you get the confirmation here, the imbalance is complete, there's supplies I need to deal with at the top there, all right? But if you're not in pound JPY, there's really not much you can do except to wait and see. Wait to see if this buy will hold. If it doesn't hold, that means JPY index, the currency, is going higher, like I showed you, for a better retest to sell, and you should wait for that. So maybe markets might do a full complete fall back to these levels here, and you can rebuy, the up run again. All right, so that's pound JPY. All right, nice and simple. Ladies and gentlemen, this is probably the last chart of the night, only because of time. I really wanted to do 15 charts, but it's fine. We did 10 charts, 10 swing signals, and 4 charts with some COT data. So we did about 14 charts today, which is not bad. But I am looking at the time, and I do apologize for cutting our meeting a little bit short. But I will be with you this week. Those of you who are interested, I will be with you. I have so many things to talk about. My, recession, market structure, trading. I want to do a war room around stocks. That's why I asked you guys to vote on the public Telegram group if you've got brokers like Arbitrate that allow you to make individual stocks, because geez, there's a lot of easy money there right now, right? It's quite obvious what's going on here. Right, guys, we've got a floor here, pound CAD. A very defensive floor with about, I've already got all this stuff marked out because I was talking about this, at our headquarters on Friday. And this is interesting because this whole area is about 1,000 pips, and who the hell wants to defend that, right? Except for the fact that this really is, the pound CAD's last hope of defense, right? And then in terms of what's been going on long term, right, you can absolutely see, and this is the second time we have CAD. So let's just pull up CAD and see what's going on with CAD. I mean, I've told you guys about the oil stuff. Excuse me. Right. Okay, clean tabling, right? Look at the sell pressure is reducing. 12,000 orders, 17, 23, 18, 9,000, 3,000, 2,000, right? It's reducing. They're removing the sell pressure of the currency, okay? And very soon, we might actually start to see a rotation here. But it's actually very common. You see this during the war months, February, March-ish, April, when oil was doing crazy numbers, the net position on the banks was very positive, right? The net position on the banks was very positive, and this is the first time we get an extreme cooling, right? A very extreme cooling of numbers. But just before, this Tuesday, the 10th, right? It's been very net positive on the banks, and throughout the war. War started on the 24th of February. Oil was already on its way to $100 mark this year, right? Without the war. The war then, exacerbated the whole thing. And so, yeah, just be mindful of that, right? And then you got pound on the other end of the table, right? They're really stacking up some buys, so we're getting very close to a bottom. We haven't arrived there yet, but in the meantime, it's just been negative, right? They're really pushing for extreme lows. And if you remember, 5, 6, 7, I don't remember where in war rooms ago, I started off with all the currency indexes. And if I was looking at the pound yesterday morning, and there we go. I remember we talked about this level here. So it's finally arrived at a very significant, buyer's area. So just be mindful, right? When they start to trigger in all these when these orders start to finally flow into the system, right? Be very prepared. Now, once again, it does not mean we're bullish on the pound. We are absolutely not. We acknowledge that the pound logically has nowhere else to go right now. It has finally arrived at the governing demand, like we said it would. We said it was going to fall. No matter what, it's going to follow the path of Euro USD. This is pound USD in front of you. This is the chart we've been using in front of you. I told you guys there's going to be a time where this thing will move fast and just remove anything in its way. All right. And it did. The last weekly demand somewhere in here marked in red was taken up, right? So now we've arrived at a governor, and you can see, right, all of a sudden, right, on your COT, that anticipation of potentially starting to break the ice. We will see in the next 2 to 3 weeks. First, we'll see a cooling off of these shorts here, right, potentially, and an increment of longs, and then we'll know, all right? But until then, I really think we should kind of like just keep focusing on Euro USD. The sad part about pound USD, unlike Euro USD, is if the pound takes out its governor, there's nothing to catch it. There's nothing, right? It's literally going to catch itself at some particular point. And so that's something to kind of like bear in mind, right? So we'll talk about, this type of charts, during the week. Like I said, let me look at my last chart of the night. And thank you so much for tuning in if you're still watching, and if you're watching the live after the live is done. I appreciate all of you guys. Thank you for liking, subscribing. Thank you for engaging. Thank you for the messages. I'm doing a better job at trying to catch up. I know there are a few messages on my Telegram I have not opened. I will open them during my time off today, tonight, and Monday and Tuesday. Right. So we've got the situation here on pound CAD that we need to be mindful of, right? The two big governing defending blocks for buys. And the first one is the one we should be very worried about, because the first one is suffered glass effect, right? Glass effect is a disgusting phenomenon where retail traders assume because the markets did this and the markets did that and the markets did this and the markets did that, and then the market is about to do that, right? We want to avoid that crazy ideology, right? And so we are not happy with the idea of the very first governing demands holding. And you never know when, but you do know that. I want you to know that when they decide to take it out, they like taking it out after they've made sure your money is invested in that area. So be very careful, right? So I recommend zero buying on the zone, number one. I'm not looking for buy setups, all right? If you see my work, most of it is to keep staying on track of where all the sell places are. All right. So if anyone does buy up here, they'll be buying and doing me a very good favor. I would very much then like to be made, to be contacted when markets arrive at, weekly supply 2 or the daily supply fresh area. Are you just above? And this is really my golden ticket one right here. This one here, this area here, weekly supply 1. Right above this cluster. And the reason for that is I don't really like the imbalance, right? So if I mark out my area of value like that, right, we do get an imbalance, but the imbalance does not account for the area of competition from either one of these wicks, right? We only get 1, 2, and then we get our own PCP. I will not be trying to sell there, and I'm saying I don't even trust the sell here. Okay. But markets have a lot to prove, right? They still have to remove this red zone here, right? So if you take it how you want to take it, if you're taking buys, I want you to know that I will not be with you. I would understand the logic of the buys, but I definitely will not be with you. Ladies and gentlemen, thank you so much for your time. I appreciate you. Have a beautiful evening. I'm probably going to put a thumbnail and fill in the description later on tonight or tomorrow, right? You'll forgive me if I just leave this video as is on the channel tonight, and chapters, I'll add the chapters tomorrow. But yeah, 365, everybody, shake my hand. Have a beautiful week. Stay profitable. Once again, if you're a registered student, double check me. Double check me today. Double check me. Euphoria is a real thing. It happens to any trader. I could have made 10, 15 wrong calls. All right. I've learned to trust my trading journal. My trading journal says, when you make this much, you start to make a lot of mistakes. I'm aware of that. I'm aware. So I closed a lot of good trades this past Friday. And so I am potentially in a making mistake zone, in a given money back zone, right? So please double check me. Anyways, appreciate you. Goodbye. I'm out. Peace.